Good evening, everyone. Welcome back to the Crestview and Magnuson presentation room, hosted in the Metaverse. This is our second episode. Big week in the markets. We're going to be covering a lot of important topics, a recap of some events, and some interesting things and moves that some of you guys might not have been expecting. So without further ado, let's take a deep dive into the markets. Again, this is the Crestview and Magnuson Market Recap, Episode 2. Hope you guys enjoy. All right, everyone. Let's start off looking at the ES. For any of you new listeners out there, I like looking at ES to determine the moves for SPX and any equities that we might see. Actually, now that I think about it, let's take a look at the heat map for the day. Crazy day. Crazy week, I guess, in the markets, specifically today, which is November 9th. A lot of companies up big today. Apple 8.9, Microsoft 8, Google 7.5, Tesla 7, Amazon up over 12%. We had some CPI news come out today. Ooh, if I can find my mouse. The CPI for the month of October came in at 7.7. Let me actually just emphasize this for you. I'm going to go to the whiteboard. Okay, so actual I know this is horrible handwriting. I apologize. I'm still getting used to this. So here we got the actual CPI report for October of 7.7%. And the, the expected CPI was 7.9%. So we did actually beat the expectations by 0.2%. Market reacted extremely positive for that CPI print for the month of October. However, 7.7% is still absurdly high. And I'm interested to see the core CPE, which is a better judgment or something that the government definitely uses to determine, core inflation metrics. But in the month of September, we were at 8.2. That was previous month. So we're down about 0.5% from September. So we're making progress. I'd be a novice to say that I am sure peak inflation's already in. There could be some things that come up later this year that change that. So I'm not going to have any stance on that topic. But I will say we're making some progress, and some of that progress is being shown in the markets, at least as of today. So now that I got that out of the way, let's hop back into the charts. Let's just share the screen. Oh. All right, so back to the charts, looking at ES here. Weekly time frame. It's been a little bit since we saw you guys last time. And there's a massive green candle here. This was the result of today's CPI print and how it affected the markets. We identified this supply zone in the gray box right here. Again, for you guys that are new, I trade supply and demand as well as range-bound trading. So I incorporate some different characteristics of other trading styles into one to try to develop the highest probability setups. So on this weekly time frame, we've got this big green candle here before a massive dump to new lows into a large demand zone from 2021. And the last up candle in this downtrending market will serve as a supply zone where price will often trade and see some sort of reaction. So created new lows here, swept the lows from June, came back up, tested it late October, nice push in. Next candle, red candle, got a nice rejection. So that could have been a decent setup had you looked at lower time frame price action and market structure. But then we got this big green candle this week, piercing through the weekly supply. So if I were looking to short a market, this is the zone that I'd be looking at. So let's take a look on a lower time frame. Let's go to the daily. They've got some stuff marked here. Yeah, so this yellow line was a key SR flip. There was a lot of stops up here. So this big daily candle from today, which again is November 11th, cleared out all these stops. That's kind of what this whole move has been about, right? If you take a look, starting in September, when we got some newer lows piercing through that 2021 low, you got some of these wicks on the way down, and then you got a big spike up, killing all of these stops, resting in this range down here. And then, you know, got another move a little bit lower, kill some of these, you know, late shorters with this candle on the 13th of October, cut some of those stops out, ride this wave back up, eventually take out the stops here, and create this double top structure here at 39.30 with these highs and these highs right here. Before we sold off back into a demand zone or a fair value gap on the lower time frame. I believe that's what this was. And then we had another rally clearing out all of this liquidity to the upside. So now, I guess my preference or my bias in this market is leaning more to the short side. Maybe not in the nearest term, maybe not like this week or, you know, next week, but I think that we've got a couple more stops to run, maybe some within here. This is a huge downward candle, so it closed fairly low to the low of the day. So I'd say that this is a fairly inefficient move here, this daily candle. So if I get rid of this box right here, if I get rid of this box, okay, I don't know what is happening right now. All right, that's fine. If I drop down to the lower time frames and look at this area, there is a gap, a fair value gap. I would call it this box right here. Hold on, sorry for the technical difficulties. I would go for this area being a potential level where we might see some sort of swing failure, possibly up into that level, filling in some of this IPA, inefficient price action, before we get a bigger move. Maybe something like this. It comes up, deviation below, underside retest, clear structure, targets below. That would be the trigger for the entry to the downside, and then we'd probably ride it down to new lows. or taking some of this buy side liquidity. As you know, we got this huge candle, a lot of buyers all the way through here. Some of the late ones would probably get stopped out, and I think we've got some more liquidity down here that would need hunting in this market. But yeah, I think that CPI print, I guess it's good news for the short term if you're a holder of equities to the buy side. But just be cautious that a 5% move in one day is not sustainable in any sort of market. So there's going to be some sort of repercussion in the form of downside price action. But at the moment, I'm currently not looking to fade this momentum. So I will be waiting for an entry around the 4080 or 49 or 4100 level just to see how price reacts, filling in some of this inefficient price action. Again, we've got some stops here that this is kind of funny. I'm just looking at this for the first time. Currently, we've got some equal highs now at this level. Back in September from this consolidation here, could potentially see a bounce or a liquidity run. Those are really the two options. So depending on what happens, we will adjust accordingly. But ultimately, I think that we see a little bit higher prices. These bear market rallies can last for months. If I just go back to the weekly, I know we covered this in the last episode, but the last bear market rally, you know, this is 1, 2, 3, 4, 5, 6, 7, 8, basically 9 weeks, and we are only 4 weeks in. So who knows what we can see in terms of rallying in this market. Again, I've got this macro range identified in red here. So overall, the bigger macroeconomic context, this is the range that I'm playing. If we do get a swing up into this mid-range 4230, that's going to be a high probability short setup, I believe, given a deviation or a rejection. And then I think we'll play it back to the range lows. Ultimately, everything is about a range, especially, you know, in markets that kind of have an indifferent sort of trend. Like, yes, we're trending down, but we've kind of started to do some more chopping, where we're kind of just bouncing within this range instead of, you know, making a massive flush and then, you know, lower high, big flush. Now we're kind of just, we've been shopping here for a couple weeks. So it's important to play ranges just because you get a lot of high probability setups. You know, creating this range low here is great. Now we know, hey, this is a swing failure. Now we can play the next macro target, which would be the mid-range, 4240, 4230. So if you're not going to play the aggressor in the market, you just got to wait for your high time frame price targets to ultimately make your moves, and there's nothing wrong with that. So I think that'll be good for ES. Again, social media, comment at me if you guys got any questions or you want me to cover anything specifically. I'll be happy to take a look at some specific stocks or cryptos or indices or commodities, whatever you like. So feel free to reach out to me with that. And without further ado, we've got a few more things to cover, specifically alternative assets. And crypto is basically what I mean. Okay. Let me pull up this Bitcoin chart. All right, we had a lot happen in crypto recently. So let me just break it down for you guys. Basically, there are centralized exchanges that hold the majority share of the market for cryptocurrencies in terms of buying, selling, swapping, sending and receiving, and having your own wallets. So pretty much the number one exchange is Binance. They've got like over 100 and something billion in assets on their exchange, held by businesses and people. And the second biggest one was, I guess, FTX, who was owned by Sam Bankman-Fried, an altruist visionary in the crypto space, as he was seen. And Binance is owned by this guy named CZ. He's an Asian guy. I don't really know how to pronounce his name. Sheng Zhu. That's not racist. That's my best pronunciation. But ultimately, FTX is facing a liquidity crunch because they had about 14 billion in assets on their books, and about 8 billion of them was their own token, FTT token, and the markets were getting a lot of sell pressure. There were some things coming out in terms of shady stuff being done within the company itself on their books and their accounting. The CEO recently stepped down. Another lady, her Twitter is Caroline Capital, stepped in to be their CEO. And there's some stuff leaked by CoinDesk about their balance sheet. And like I said, 8 billion was in, or a lot of billion. I'm not sure about if it was 8 exactly. Maybe it was 6. But the rest of their assets were basically very illiquid tokens that they couldn't really dump if they were to face a liquidity crisis, because they would either tank the market or no one would buy them from them at, reasonable prices. They only had like $135 million in cash, and they had like 8 billion in liabilities, which were almost all loans. So that's not something that you want to see from a very large company, especially one in cryptocurrency. You need liquidity. That's, the thing that drives exchanges is their ability to provide liquidity for its customers. FTX halted withdrawals because of their lack of liquidity, and there were some funny things going on Twitter between both CEOs of those exchanges, and ultimately the number one exchange, Binance, ended up placing a buy order on FTX, the second largest company. Obviously, they needed to do their due diligence first before the transaction went through. And the funny thing about it was they did their due diligence and they found a massive hole in the balance sheet, so they didn't go through with the purchase. And basically, everyone was trying to withdraw their funds, but they couldn't. People were starting to sell just all their assets. I'm sure FTX was selling their assets, trying to get that liquidity. And ultimately, everyone else was selling on this news that the number 2 exchange in the world was going down. So we got this huge 15-20% candle on Bitcoin to the downside. And I use Bitcoin as a gauge for the overall market. It's the biggest coin out there, holds the most market share by a landslide. So if you're looking at any of the charts, they mostly look like this. Big candle to the downside. Actually, it's kind of funny. Swing failed the lows from June, and now we're looking to close this weekly candle above that, which, again, I discussed last week. Identified this range here with the dark lines here from 24.3 and 17.5. But ultimately, this move is one that does not come as a surprise to me. We had a lot of liquidity built up to the downside between 17 and 19. And everyone was expecting a bullish move because of the CPI. And what do you know? Last night, news comes out of the second biggest exchange going underwater. Big fat red candle to the downside that I personally bought some crypto to swing, hoping that we might reclaim and establish ourselves back within this range. So hopefully you guys taking proper risk management with your crypto trading, as we can see the extremely volatile nature of this asset class. But yeah, Bitcoin dropped under 16,000 for the first time since 2020. Sweet, taking out some of these lows here from late 2020, November, which is interesting because it kind of sets the stage for, you know, the possible rest of this crypto winter, as far as when, the best time there would be to accumulate crypto, Bitcoin, Ethereum, and your favorite alts, as well as possibly setting up a new range if you are trading cryptocurrency actively. So it'll be interesting to see what happens in the near future, but ultimately, so let's take a deeper dive into Bitcoin right here. Maybe I'll hop into a couple of charts of some altcoins later. But yeah, couple huge red daily candles here, sweeping all of these lows for the last 3 months. And interesting enough, we had a daily close yesterday, closed perfectly on the low from June that I have had on here for 3 months, and now we're starting to reject. So although that CPI was a good print, I just believe that there's a bigger macroeconomic sentiment out there that, along with the insecurity of some of these big centralized exchanges, on top of the fears that we're not pivoting anytime soon, we're still in a phase of quantitative tightening, interest rates are still going up. I think people are just being forced or leaning more to the side of selling their risk on assets, and crypto is extremely risk on. It's probably the most risky. I think volatility is over 100 on cryptocurrency, so it's not a surprise that we're seeing a lot of exaggerated moves from equities over to crypto. Like again today, we did get a big green day for the CPI print, but didn't nearly recover half of the losses we saw leading up to it. So in my opinion, I think that we are going to establish a range lower, and I've kind of marked out some levels already. This macro SR level at 13.7, and then this black line is, I guess, going to be our range high until we see a reclaim of this 17.5 level hold and break market structure to the upside. I think that is going to be the new range that is established. And let me just map this out right here. Get the mid level. It's going to be 15, 6, 7, 8. Let me just finalize this for you guys. Boom. There we go. And I kind of dove into range trading a bit last week, but again, when you identify these macro levels, price does tend to actually react from the extreme ends of the range and the mid range. So coincidentally, we got a rejection from this mid range between this 13.7 and 17.6. And now we have closed. We did try to break above the range high, which was formerly a range low, and now we closed back inside, and we're rejecting again down to 17.3. So till the near future, we see a reclaim of 17.6 and market structure break. Then I think we've established a new range, and I'm going to be trading it as such. So the higher probability move, I guess, right now is to the downside in Bitcoin. Not sure how quickly this is going to happen. We haven't really seen much volatility until the past week. So that's something to keep an eye out for, is the volatility. But yeah, interesting times for crypto. I think that we're kind of at a make or break level. If we continue to hold underneath 17.6, it's not looking good really for crypto. I've got a couple areas marked out. 13.7, and then not 3,000. I don't really think that that's going to happen. But possibly the $10,000 to $12,000 range. Some of that accumulation and consolidation before the large bull run of 2020 and 2021. So some of those targets are going to be in play. And my belief is that equities are still going to see new lows in the midterm / long term. So if I believe that, then I also believe that Bitcoin is going to revisit some of these old levels of supply and demand, kind of replace some of this inefficiency in the market that we saw, all the way down here. I've kind of got it already marked out. Pretty much up only candles, up only days, up only weeks. So that's something to keep in mind. But yeah, if you're going to trade cryptocurrency, be sure to take the highest probability setups. Proper risk management is key in trading, and asset management. You can't over leverage or overexpose yourself in any given position, or else you're going to get rinsed, especially in a bear market. And I believe that you'll probably get rinsed more heavily in cryptocurrency, given that this is the first true equity bear market that cryptocurrency has seen. So yeah, we are going to be trading a new range for the time being, unless we see a close hold market structure break to the upside above 17,600. That's my personal opinion. This is not financial advice. Had to throw that in there, but that is what I'm looking at in these markets. Let's take a look at some altcoins. One in particular that I wanted to look at is Solana, which is a layer 1 cryptocurrency that is not really a competitor to Bitcoin or anything like that. It's just a lot of applications are built on top of their network. And I kind of wanted to discuss accumulation of some of these altcoins, these heavy hitters, Bitcoin, Ethereum, Solana, these guys in the top 15, 10 market cap. Solana was one that I was looking out for, a while back. I drew this box, this gray box right here, man, probably 4 months ago. We've got a lot of lows in this area, dating back to 2020. You can see this right here. I was hoping that, possibly at the bear market bottom, we're going to get a sweep of these lows and create a range, maybe around this area. But as you can see from this chart, we got a 40% move to the downside, right into the gray box. So I had some limit orders placed on here at like 15, 16, 17. It's kind of the same price right now. We actually got down to $12, I'm pretty sure. 12.37. But, that's the thing with crypto. If you have a proven method or methodology for, trading or accumulating, if you've done this before, you got to stick to your plan. I, set my limits here. I was like, all right, this is a level where I'd comfortably accumulate a spot position of this crypto. We got the move. I accumulated some. If we establish a new range in this area, there's only going to be, more time to accumulate more. And again, if you get another leg down, the probability only gets higher as to, maybe not the probability, but your ROE will definitely go up as the price goes down, because this is a good project. However, there's some people say all they want about it. I think it's a good project. A lot of people building on the Solana network. So I think it's going to be one that does well in the next bull run. We saw this big drop because that was one of the coins that Sam Bankman-Fried and FTX were backing, had a lot on their balance sheet. But I think that when the dust settles, Solana is going to be one of the coins that does well. If you can tell by what happened during this bull run, I mean, something like this just doesn't happen on a regular basis and then completely dies. You could say that with the Luna fiasco, that yeah, it's possible, but I don't really see the same effects of that situation happening here. There's no algorithmic stable coins involved. I think that there's a lot of potential with this project. And again, we are just trading within a macro range, playing these key levels of SR, demand, and just general price action, playing the high probability setups. And personally, I believe that we have a high probability setup here with Solana. Could we see another leg lower? Yes, everything can always go lower, especially if equities rip down farther. But at this moment in time, this is a position that I'm willing to hold because I fundamentally believe in the project. But yeah, I think that is going to do it for today. To recap, we covered ES, ultimately trying to get a bigger picture for the overall equity market. We covered Bitcoin and some of the recent news that happened between the two largest exchanges in the world, some of that debacle, as well as Solana, just because it's one that I've been interested in. Kind of used it to show how I will be planning to accumulate some of these cryptos in the near future, possibly 3 to 6 months. So yeah, if you guys enjoyed, we are going to be doing these. I guess now we're doing them once a week, but maybe we get them a little bit more frequent. But we're going to continue this. We've got some good feedback from some of our listeners. Even though we've only got a few, we'd like to see this sort of environment increase, as I think we're the only ones doing this still, unless anyone started doing it since last week. But yeah, if you like it, share it, post on social media. Feel free to tag us on social media and ask us questions. Let us know how you feel about the recordings. But without further ado, thank you very much. This has been the Crestview and Magnuson presentation room, market recap number 2. Thank you guys for tuning in.